It looks like, our friend, Abdulaziz bin Salman, the new head of Saudi Arabia's energy minister, has done what he set out to do, which is keep the price of oil stable. I know he wants it higher. Do you think he'll get it there?
Do you think he can control the dollar? I mean, I think the biggest thing here, Brian, is the stuff that's out of our control. And while the fundamentals are looking okay, and I think further to your question, there's obviously a lot of attention on Iraq and the relationship between Iraq and Iran and whether there's smuggling, Iraq cheating within the OPEC context. Iraq cheating within the OPEC context. Get them all confused, right? Because it's kind of the same thing at a given point. So that's clearly their major attention. I think they've already addressed kind of the issues of West Africa, Angola, and Nigeria, where they were upset. And you've had huge imports from China to help them. But ultimately, at 40, I think the biggest driver right here is the dollar.
Yeah, and the dollar's been on a free fall, as we know, Paul. Let's get more now specific, because BP did something that really many people thought not only it wouldn't do, but it just others can't do. It halved its dividend, cut its dividend in half. Do you think that's going to drive investors to other oil stocks? And do you think there's a chance Exxon might do the same?
Well, obviously, you don't want to look at just the dividend cut, right? They said a couple of other things at the same time. They said they're going to halve their volumes. That is, their oil and gas production volumes, or certainly their oil volumes, will be cut by 40%, not quite half. But nevertheless, there was a very big deal, which obviously was the new CEO, Bernard Looney, absolutely taking BP into the energy transition very aggressively. And we'll see more from the company in September. But of course, it's absolutely unprecedented that a company of this scale would cut its dividend in half and go up 6%, as it did on the day it made that announcement. So obviously, it's absolutely the energy transition embrace that they've undertaken that made the stock go up from investors who are demanding this. So I don't think, I argued that basically shareholders asked BP to cut its dividend and to start investing heavily in renewables, essentially. That, of course, our conclusion is very bullish for oil and very bullish for U.S. E&P companies.
And that's because the production obviously cut in half, and we're not maybe necessarily going in the environmental direction here that the European majors are. I know you've called EOG in the past the Apple of oil. Very quiet company. CEO Bill Thomas, I've been trying to interview the guy for like 10 years unsuccessfully. Do you still like an EOG?
Yeah, they reported last night. I mean, their presentation is not making the major announcements, certainly not like BP, of a huge strategy shift. We've had some other minor, important, well, I don't say minor, less huge strategy shifts from the likes of Pioneer, Cimarex, where these companies are now saying growth is out. Forget about it. We may grow, but ultimately what we want to do is grow the dividend. We want to grow the free cash flow. EOG's basically saying a similar thing, but in a quieter, as you say, way, whilst really, continuing to perform very well operationally. Of course, the price environment was absolutely terrible in Q2. One of the problems for the stock, though, Brian, which is very relevant, is the potential for a Biden presidency, which obviously seems very high. And there are concerns that EOG has very high amount of federal lands. I think this is all a bit of a nonsense, because actually Biden has said he doesn't want new activity on federal lands. But nevertheless, those with Gulf of Mexico, Deepwater Gulf of Mexico exposure and New Mexico exposure have been affected. The market has been worried that the Biden presidency is going to be negative for them. And